Hello, everyone, and welcome to Frontier Opening Bell. I am Bosun Omofaye. It's Tuesday, June the 30th, the final trading day in the month, and of course, effectively wrapping up the first half of 2020. My panelists this morning, Joshua Odebisi, who is the banking analyst at Vertebra Capital Management here in Lagos, Nigeria. Thank you, Joshua, for coming.
Thank you for having me.
It's good to have you on the show. And from Nairobi, Kenya, Ali Kansachu, sitting in there for us at Rich Frontiers Management, the CEO and founder. Good morning, Ali.
Morning, boss. Good to see you.
Great. It's good to have you all on the show today. So let's just go straight and give you a snapshot of how we finished off. Some green shoots on the African equity markets on Monday, taking their cue from the rest of the global space. Nigerian market about 0.12% in the green territory. The Ivorian market was a little bit bigger, reading 135.28, 0.3% printing green. The Egyptian market continued the negative trend, down about 1%. Meantime, Kenya was bigger than the Ivorian market and the Nigerian market, 0.75% on the Nairobi Securities Exchange All-Share Index. The South African JSE was up almost 1%, printing 54,141.5. Let's go to East Africa and check in with the big stories making the headlines as we go on to today's show. The Nairobi Securities Exchange All-Share Index up 5. Kenya commercial bank contracts was also in the derivatives markets. I'm sure Ali has a bit of not just equities but the derivatives market reading for the largest market east of the continent. Meantime, Kenya says its diaspora remittances jumped to 27 million Kenyan shillings last month, up from 22.06 billion shillings in the previous month. Meantime, Uganda's UMEME to invest 310 billion shillings on electricity. That's one big story on Energy Africa. Meantime, SAMIC in Uganda says there will be no dividend payments to be considered at its annual general meeting. Which of these are you biting into first, Ali?
So thank you, Barson. Let me just start firstly with something that wasn't on that list, which was the IMF gave an update on sub-Saharan Africa. I'm sure you saw that yesterday. They tilted...
Yes, of course, Nigeria as well, yes.
They tilted sub-Saharan African GDP lower to minus 3.2%. Spoke about the pandemic being in an exponential phase in Africa, which caught my attention, and spoke about potentially 10 years of growth being wiped out in terms of per capita income. So quite bearish, and about Kenya in particular, said we're going to be negative 0.3% full year 2020. I think will turn out to be a bit more negative than that, but that was the first, that will be the lowest rate of growth for about 30 years. So it caught everybody's attention here on the eastern side of the continent. Nairobi All-Share was strong yesterday. It had been in a downtrend, so this was a rebound in that context. The derivatives market to which you were referring to was a reform that was introduced last year. It's still fairly illiquid, thinly traded, but it was good to see this, a bit of interest there. It's designed to allow people both to go short, to be able to go short on stocks, something you can't do at the stock exchange at the moment. The remittances number, which is for people to just think about in dollars, $270 million. Nothing on the scale of what you see in Nigeria, of course, but what's interesting in that number is the fact that it's higher month on month in a context where the IMF and World Bank are predicting lower remittances into Africa in the region of 20 to 25%. As you can see from that number, it's up nearly 20%. And I think for those who are scholars of remittances, what it might be signaling is people coming back and sending money that they had saved up in the host country ahead of their return. Because clearly, 1/4 to 1/3 comes out of UAE, the Middle East, and we've seen a lot of returning Africans out of that region because of the lower oil price. Umeme, that's interesting, 310 billion shillings in the electricity sector. Also another announcement today, Jubilee Insurance, which is our biggest insurance company here, upscaling their investment in Uganda's Bujakali Dam, which is the biggest hydropower source of energy in Uganda. We spoke yesterday about the oil and gas issue as well. And then finally, Stanbic Uganda, very blue chip bank in Uganda. It was listed a few years ago and doing the same as many other banks are doing in East Africa, which is skipping the dividend payout, shoring up the balance sheet. And I think that's to be taken in that context. Briefly, just to touch on Ethiopia, where we got this issue with the filling up of the Gerd Dam. I don't know if you saw yesterday. There was some.
I know you're not going to miss that, Ali. I was going to come back to that North Africa because that's a game-changing news to see how this issue is resolved. Please go ahead.
No, so I was just watching the conversation. Well, it's not a conversation on Twitter. And the Prime Minister's office, somebody associated with the Prime Minister's office in Ethiopia, put out a pretty aggressive tweet yesterday saying, you know, we're not going to be colonized, we're going to do what we've got to do. So we've got to keep an eye on that because, you know, on one side you've got the Egyptians who really see it as their lifeline. 95% of the population of Egypt lives on the Nile. Any reduction in that flow is going to be very, very difficult for them to handle. And similarly, you got the Ethiopians saying, well, you know, we need this energy, you can't keep us back. So from a geopolitical risk point of view, your viewers should be keeping an eye on that situation. And final point, also in Malawi, where everyone's very optimistic about the new president, an ex-pastor, a lot of excitement about that situation.
Okay, I've got a question for you, Ali, about Malawi. When in a few minutes down in the show, are talking about the new finance minister who was the insurance director or the head of the insurance business, now become the finance minister. Would that be a game changer for Malawi and that small economy within the Southern African region? Thank you, Ali. In just a quick minute, let's take you around through the West African Nigerian markets. We rounded off about 0.12% yesterday. Meantime, the big story on the Nigerian Stock Exchange was the closing gong by the managing director of Lapo Microfinance Bank. That was an unlisted bank, a commercial microfinance bank, but floated. It still is 10 billion naira bond or 6.2 billion naira bond on the Nigerian Stock Exchange. A big story there. Meantime, some earnings are coming through from Q1 from small listed companies. Champs PLC posted 33.8 million naira loss in first quarter. Premier Paints also reported 7 million naira loss within the period. In the healthcare sector, Pharmadeco reported a loss of about 87 million naira, lower than what was reported in the same period of first quarter of last year. In Ghana, the news, of course, was all over the social media yesterday. Dominic Adu becomes the first Ghanaian CEO at First National Bank. Within the UMOA on BRVM, Kase will be paying 6% on his 10-year half-year bond loan today. That will be paid today. But meantime, in Nigeria, Nova Merchant Bank, which is an unlisted merchant bank, opened its book building for a 10 billion naira 7-year unsecured bond, which is callable in 5 years. Let's bring in the banking analyst at Vetiver Capital to talk to us on this. Joshua, what's your take?
Okay, so, well, it's quite interesting that from the early results we've seen, you know, quite a few, you know, mild losses. I mean, Charms with 33.8 million naira and Premier Paints with 7 million naira in losses. Now, this is to be expected because these companies obviously have been heavily impacted by the shutdowns that we've seen across the country in the first quarter. Obviously, this might not really give us a full picture because, you know, some of the larger companies are going to, you know, still come out with, you know, results going forward, but these are still just Q1 results. It's Q2 that will be the more interesting, you know, give us a clearer picture of exactly how much of an impact it has had on our economy. Now, going into the Series 2 bond listing of Lapo, I think obviously it's a very smart one to be still be listing bonds at this time because of the fact that the yield environment is pretty favorable for companies trying to borrow money at a cheaper rate. Now, a company that's unlisted like Lapo would not want to list on the NSE in a climate like this because of the fact that obviously investors might not be fully encouraged to invest in such a company, and the kind of prices they would be looking at in this climate might not even be favorable for the company. It's actually interesting you mentioned Dominic Adu becoming the first Ghanaian CEO at First National Bank. The bank is pretty young in Ghana. I think it's 5 years old, and their outgoing CEO is, I can't remember his name now, but this Dominic Adu, he came from GHL, I believe, and he seems to have a very good profile. He's a chartered accountant, and I think that it's a step in the right direction, for the bank. And the outgoing CEO is going to become the executive director, so he's not really going anywhere. For Nova Merchant Bank,
how about Nova Merchant Bank?
Yeah. So Nova Merchant Bank, 10-year bond, 10 years unsecured bond. Again, because of the fact that this current climate is very favorable for companies trying to borrow money at a lower rate due to the really weak yield environment and the appetite from investors for bonds and commercial papers. This is, I think, a very good strategic move to raise money at a very cheap rate, and it's callable in 5 years.
Just a quick one. What we saw from the notice we got yesterday was that part of this 10 billion naira being raised by Nova Merchant Bank will help it meet its tier 2, the bank meets its tier 2 capital base.
Yes.
So you're a banking analyst. Do you think some of these banks, perhaps the new ones who had come on stream in the last couple of years, none of them listed yet on the Coronation, for example, and others, do you think what Nova Merchant Bank is doing is an indication of perhaps some of these banks will be needing capital, and maybe other tier 2 or tier 3 Nigerian banks?
Right. So that is a possibility. I think obviously we've explored the idea that going forward, a lot of these banks are going to probably need to raise more capital. Also, there's talk from the CBN about raising, the capital requirements for banks in general. So that might lead to a large spur in capital raising, both, in equity and fixed income. But for the smaller tier 2 and tier 3 banks, going forward, it's very, very likely that a few of them are going to need to raise, tier 2 capital just to show up their capital base and strengthen, their activities. So it's very possible that we might see one or two. I think we've seen from some of the smaller tier 2 banks like Union Bank and the rest, they've raised a little bit of capital in recent times, and this is a very favorable moment to be doing so. So I think that this is something that a lot of them are exploring and are looking at, and probably going forward is going to be it's very possible that we're going to see a lot more of that.
Okay, I'm going to come back to you in a couple of minutes to give us your view about the banking sector on the market so far up to where we are now today. But let me just, let's touch in quickly with the Southern African markets, where the GSE had a very positive reading on Monday. Meantime, I'm sure Ali is going to started head scratching yesterday on this news when the IMF says the talks with South Africa to tap into 4.2 billion in special drawing rights with the Washington institution, that the talks are continuing at a measured pace. South Africa has said it doesn't want any debt forgiveness or whatever, but looking to get more debt. Meantime, Moody's says South Africa's 2023 debt stabilization plan will be difficult to achieve because of the weak track record. Meantime, Naspers, the media entertainment giant, revenue up 17% according to news yesterday. Meantime, its food delivery orders was up 102%, but profit fell 4.5%. In Botswana, this stock exchange Seedco profit, that's a listed company, up 62%, $6.07 million for the full year ended March 2020. Ali, where do we start from in Southern Africa, the IMF or the Moody's, or they just co-joined somewhere there, talking about the fiscal and financial status of Africa's most advanced economy?
So, we've known for a long time that South Africa's got serious fiscal challenges. However, we've got Tito Mboweni, who is, I would say, one of the preeminent economists in sub-Saharan Africa, somebody who has had tremendous experience, understands how to message the markets, and therefore is, in my opinion, a very safe pair of hands for a very difficult, complicated period in South Africa's post-apartheid story. I have a lot of confidence in Tito. I think he really is a preeminent policymaker. What I found curious was measured pace. Measured pace in a situation of a post-COVID world seems to me to indicate you're walking very, very slowly when you should be running at top speed. So I was curious as to that phrase. What does it mean? Is the IMF playing hardball? Is South Africa playing hardball? It seems to me there's a message in those two words. But clearly South Africa is going to get 4.2 billion. They need it badly, and they're going to get it. Moody's has stated the obvious. If you look back, particularly at the time of President Zuma, there was no debt stabilization plan that you could speak of. So you're now having to deal with that era. You're having to bring things under control, and you've been hit by this economic circuit breaker. So I think, like ratings agencies can do, they tend to state the obvious after the whole horse has bolted. So we know this is complicated for South Africa. And I think for now, it seems that they're able to access the financial markets. They're going to get help from the IMF, but they've got to make some really, really tough decisions. And I hope Tito and President Ramaphosa are going to make those decisions. Naspers, very interesting company. I would say this is our most interesting company on the continent in a post-COVID economy. If you look at the digital business, they were ahead of the curve. They bought in assets which people really didn't connect dots. But now when you look back at that array of assets in the digital economy that they've got, it's very, very interesting. They relisted, you remember, they said we're not getting a good valuation in South Africa. They went and listed themselves in the Netherlands.
Yes,
it's
in the Netherlands, yes.
Really been performing this year. It's been one of the top in the Netherlands, as people see it as a digital play on the African continent and elsewhere, because it's not just Africa. They've got assets in Eastern Europe, in Russia, in many other interesting places. So I would say to investors, this is definitely a company to watch and keep an eye on. And it's interesting, up 17% food delivery. We all know that's a big story. We're all sitting at home and ordering in. But overall, 4.5%. Just touch on two quick stories. Zimbabwe Stock Exchange still closed. Black market rate way above this new repriced official rate. And then you were asking about Malawi. I haven't seen such an upsurge of optimism. This man, I was listening to him speak, and he's very evangelical, but he's making people very, very excited. This is the old MCP of President Hastings Banda, the famous bowler-hatted president, you will recall, and they've come back to power. But it's a small economy. If they get it right, they get the optimism going, I think they'll bounce.
Malawi's got a lot to offer in the agri-commodities space with its tobacco and a couple of other products. That's a very good tea as well. So they've got a lot going. So they've got to hit the ground. The new administration's got to hit the ground running. Very quickly, we've got about 3 minutes to wrap up the show. Let me ask Joshua to give us his take. Give me your take on Nigeria's banking sector so far. Do you think we've seen a better performance of this sector within the quarter?
Well, okay, within the quarter, it's difficult to say. I think the biggest saving grace is actually the fact that a lot of banks have applied for, loan extensions for a lot of their loans. So at least 50% of their loans are going to be extended, and so the tenures will be, lengthened. Now, this will reduce NPLs going forward. but it will also have an impact on interest income because they're not going to be able to book a lot of that income. That income is going to have to be pushed forward by probably three months or more. So I think the banking sector is very stable. It's going to remain stable thanks to the fact that, you know, the banks have recognized that a lot of, you know, customers are not going to be able to pay their loans due to some difficulties, and so they've pushed back the payment periods and given it a little bit more time and space, so they won't have to book more NPLs. So the NPL ratio is going to stay stable, and I think that this is going to reflect in the financials because you're going to see lower interest income but pretty stable non-performing loans. So this might have just a slight impact on profits overall, but at the end of the year, we might still see, you know, a small net positive growth in the banking sector. I think this is still a little bit cause for optimism.
Okay, a quick one, Joshua, before we let's still on the banks. The Nigerian authorities yesterday renewed the lockdown easing by a couple of more weeks, phase 2. There'll be more free movement of people interstate and all of that. Do you see a bit of increased banking activity?
Well, I mean, sure, but the thing is, obviously, the banks have had to adapt during this period, you know, to a bit of a more digital footprint, and so we've had a lot more electronic banking, mobile banking, and things like that. So I don't think activities really have been stopped. Maybe we'll see more in-building or in-house activities resuming going forward, but I think that in terms of economic activity, obviously, as things start to open up more and trading starts to happen at a higher pace, we might now start to see a little bit more of an impact on the banks.
Interesting. Thank you so much. Let's go to North Africa, where the Egyptian market was a bit of a contrarian on Monday. The rest of other markets we tracked. Meantime, tomorrow and Wednesday will be a 2-day holiday in an Egyptian market. Meantime, the central bank there issued 6.75 Egyptian pounds treasury bonds of 2 installments, and the authority says it's suspending plans to buy stakes in state-owned enterprises because of unfavorable market conditions. Meantime, Libya's National Oil Corporation is set to resume oil production after talks with international bodies. That seemed to be some good news on one hand this morning for the global oil market. On the other hand, was a negative story from Shell, Real Dutch Shell, saying it's going to book impairments of between 50 to 22 billion US dollars, and says its quarterly earnings will be negatively impacted. Ali, so let's wrap this up on the North Africa. Is it the Egypt you want to talk about or Libya's oil story?
Let me just quickly touch on Egypt. Clearly, Egypt, your 3 headlines tell us the full story. Egypt central bank issuing 6.75 billion T-bonds. That is their primary channel. They want those fully subscribed. They want the money to come into that. So whenever you get that kind of announcement, it's going to suck money out of the stock market. So I think the stock market will underperform until they get their funding complete. So you've got a bit of a lag effect. With respect to the SOEs, obviously the market is too low. They're not interested at these sorts of prices. Libya, since 2011 and Gaddafi's fall, has been an unstable country. We know this. It's become a mini proxy war with Turkey on one side, European powers on the other, General Haftar in the middle. And I think for now we can assume that oil production out of Libya will remain suboptimal until the political situation is brought under control. And I see no sign of that happening yet. So I don't see Libya. We're going to get these announcements on and off, but it just takes one drone or one thing to take it all off again. So for now, I see Libya as pretty much out of the game, which is positive, I suppose, for the oil price.
I understand, yes. One day, Libya comes in the news, makes everyone hopeful. The next day, like you said, one drone, whatever attack from any of the generals, warring generals and coup, here you go, it all goes up in flames. So you can't really place your bet on Libya's oil production. I see you. When I see you is when I see you. And that's what Libya's oil production is all about. When I see you is when I see you. Thank you, Ali. Thank you very much, Ali Scan-Sacho, the CEO and founder at Rich Frontiers Management in Nairobi, Kenya. Thank you very much for being on the show this Tuesday. And of course, Joshua Debisi, who is the banking analyst at Vectiva Capital Management, one of the licensed investment banks and securities trading firm in Nigeria. Thank you both. It's a Tuesday. We'll see you all again tomorrow, 1st of July. Let's take it up from here. You can watch this on our podcast, Frontier Africa Report, Frontier Opening Bell, as well on YouTube. You can follow us at Frontier EFR, and of course you can follow our guest analysts as well on social media. Thank you all, and I'll see you again tomorrow. Bye for now.